following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tommy O'Brien.
Good morning, everybody. Monday morning, 10 o'clock in the morning, a little bit of volatility to kick things off. We got the S&Ps up 8 points right now at 38.48. Last night at about 4:30 in the morning, things looking a little dicey. Maybe a continuation of the acceleration we had last week. We got a chart of the S&P up here. Let's start it off with. I'm going to back this up and put it on a 10-day, 30-minute chart. Brings us back to 39.34. Let's actually back it up to a 20-day to get the all-time high in there of 39.59. The high's made February 15th. We make just near that high again on about February 25th. Now, that is the high we're talking about. I'm going to zoom it back in on a 10-day, 30-minute. Yes, there's your high of 39.34. And since then, it's been roller coasters in both directions, folks. We begin things on February 25th when you trade from 39.34. We actually make it to below 3,800, I believe. Towards the end of the day, just missed it, the low of 38.06. You're talking about 120 points, though, in the S&P. We almost get it all back to Monday's action, March 1st. We reach a high of 39.12. Wednesday, the acceleration continues. We trade from about 3,900 to, let's call it, about 3,800. You get a 100-point move. We rise about 40 points. We basically get a 382 retracement there. If you pull it up, almost a 50% from the flash low. If you pull it up from where we were towards the end of the day, about a 382. Nonetheless, we get a retracement. The sell-off on Thursday, we go from a price point of 38.40 down to 37.20. Again, 120 S&P points. My goodness, right? You climb all the way back up to about 38.11, and boom, just like that, you sell off on Friday, and then the run begins. Zooming in on the action. Friday, 11 o'clock in the morning, we trade from a price point of 37.28. We make a high just prior to the close on Friday's action of 38.50. You're talking about 120 points in the S&Ps. Now, interesting that we're sitting right basically at those levels. We open Sunday night. Futures open, reach a high of 38.66. We give up 60-plus points. We get basically it all back. Volatility, folks, in spades. It is here for the foreseeable future. Jumping over to the VIX. Look at this VIX volatility we've gotten, right? Hovering over 30 on multiple occasions. You back it up to the 25th, we got a 30 print. You back it up to the 26th, we got a 30 print. You back it up to Thursday's action, we got a 30 print as well, 31.89 actually, 31.90 the high. And we did get a 30 print on Friday as well. So you're talking about 4 days out of the last 7 trading days, the VIX has hit 30. You better be paying attention, folks, because I would not say the volatility is over in either direction yet. When you see that type of action, the market not quite comfortable yet in either direction, very quick to price in a lot of premium, probably rightfully so when you're seeing the types of moves that we have going on in this market. Now, the NASDAQ 100, tech stocks in particular, there's been some pretty dramatic pullbacks. I mean, let's start it off with Apple, okay? Apple shares, putting it on the daily, quite the pullback indeed. I mean, we're now back to the beginning of its breakout of August 20th. You're at about 118. The high, 118.39. From August 20th, it's March 8th. Quite the consolidation. We're down now about $27. You're talking about almost a 20% pullback from the highs we had in Apple just 6 weeks ago. As the tech stocks beginning to struggle a bit, we're seeing higher yields. Some of the growth companies in particular struggling, maybe valuations just getting a little bit lofty as these things have been rocket ships. I mean, you had Apple almost triple in price from the March lows. Now, there were some great bets, some great wagers, some great investments across the board in many companies that were decimated towards the lows of last March during COVID. The returns have been dramatic. But when you think about a company like Apple, that was going nowhere, folks. Their core business was not really going to suffer too dramatically. Everybody was still going to need phones. We almost needed them more. You need to be able to operate in an online environment, right? Well, since then, Apple, talking about a 3-bagger from the lows, let alone prior to COVID, you go from 80 to 145, giving back some of those gains. Just for some context here, a Fibonacci retracement level, when you run the whole run from the lows of March to the highs we just had in February, we're approaching the 382, which is only about $8 from that level. It happens, folks. You know, quite the run. We go from 53 to 145. You better believe that a retracement's possible. We're seeing one right now. We had one earlier in the year where the markets got a little bit away from themselves in August. We reached a high in August of 137.98, and we pulled all the way back to 103, right? So that pullback in August was about $35. We've only given it back right now about $27 from a higher valuation. Context is important in everything. All right, jumping around to some of the other tech stocks. Google has behaved so well. I mean, look at this. We're sitting at 2108, the all-time high of 2152. Google really faced some heat when the antitrust suit started coming to fruition. I believe that was back in August, maybe September. Didn't take long, though. Google holding up so well. You're talking about a price tag of 2104. We hit a low in March of 1,013. Amazon, got to talk about the big dog out here. Talked about this on the program a little bit last week. Now, this is a weekly. Let's put things back on a daily for some context. We are now in a consolidation from Amazon from July 2nd, July 6th, approximately. July 6th is the first day that Amazon climbed above $3,000. We've been chopping around at that level since then. I mean, you're talking about 8 months. 8 months. Amazon has been chopping around. You could say rightfully so, right? All of the growth priced in, where it more than doubled from the lows of March at 16.26 to a high of 35.52. If you're looking for some longer-term positions, folks, in some of these big tech stocks, you're getting almost 20% pullbacks from the highs. That's an area that you could start considering entering, at least with a partial position for a longer-term position. Amazon, a magnificent company. I have some Amazon on the long term. I've had it prior to some of this run, okay, for retirement accounts and the so forth. You're getting some nice valuations off of the highs, especially when you consider you're now in a consolidation for about 8 months. The only warning there, right, is that we got some volatility coming for the next 2 or 3 months at least, folks, as the market tries to decipher what happens with the economy, what happens with the vaccine rollout, how does that impact the businesses that rely on, whether it's the hospitality and service industry. We got non-farm payrolls on Friday. Decent number, a lot of the number growth coming from the service industry in particular, but we're still 10 million jobs under where we were prior to COVID. We need to make up those jobs, a lot of them in the service sector. They need to come back. They need to come back pretty quickly, too, because we're going to be out of this in the next 3 or 6 months. Doesn't mean it's still going to be, cases here, cases there. Every American's going to have a right to a vaccine. They're going to have access to a vaccine, I should say. The supply should be there. Places are going to be back open. Vaccines will be everywhere for those that need them. Those that are most vulnerable will have access to them. Hopefully hospitalization and deaths will be at almost a zero amount. That's where they should be, folks. If you're at risk, I encourage you to look at the science, get out there, get a vaccine, protect yourself. The science says they're safe beyond a reasonable doubt at this point, beyond it even close. We'll get into some of the numbers. We pushed almost 3 million vaccines out on Saturday alone. The number is rising dramatically, but guess what? As they say, it's time for the market to pay up, as in rhetoric needs to become reality, and we need to see that happen in a big way. Stay tuned, folks. I believe we have a great break coming up. To my producers, what's going on, fellas? Maybe you're paying attention. Markets, S&P's up about 18. There we go. NASDAQ still slightly in the red, down 29. And we get the Dow charging higher, up by 300. Stay tuned, folks. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Just like that, we got all the indices making intraday highs right now. NASDAQ 100 back positive by 5 points. We get the S&Ps now positive by about 23. Critical area we'll be coming up to right where we were, the highs of the open last night. How about the Dow charging higher above anywhere we were last week, putting the Dow on the daily right now. You're coming up to all-time highs in the Dow, 31,777. We're trading the high 32,033, and the Russell up about 25 points, about 100 points off the all-time highs in the Russell. S&Ps right now, you're talking about almost 100 points from the highs as well. NASDAQ 100. A little bit of a laggard, got ahead of itself. We're talking about 1,250 points off of the highs that we made on February 16th. All right, jumping around to some of the other news this morning. Staying a little bit macro in terms of the economy and fundamentals. Goldman economists seeing 4.1% unemployment in the U.S. by the end of the year. The number that just came out, I believe we're at 6.2%, I believe, is where we just were for non-farm payrolls. Goldman talking about reopening, fiscal stimulus, and pent-up savings should fuel very strong demand growth. Their chief economist out there writing in a report highlighting an outlook that's more optimistic than some other forecasts out there. The assessment follows last week's payrolls report for February, showing an increase in jobs, almost twice as what they were forecasting. But again, that was all in the service industry. It's the expectations, folks, I keep talking about it, they are going to be monumental in the next 2 to 3 months. When we get over this hump, when people who want the vaccine get it, when all restaurants and hotels are back open, when people are booking travel, if these jobs don't come back in a pretty quick fashion, the market's going to be a little worried about maybe that happening. I don't think that's going to happen. but there is going to be a lot of volatility priced into some of those earnings some of those jobs numbers when they come due. Unemployment surged dramatically last year, of course. The Goldman Sachs forecasters, and this is a key part, also expect participation in the jobs market to pick up because most workers who left the labor force still cite the pandemic as their reason and will likely re-enter once life normalizes. Interesting factor when you look at how that might weigh on the economy. You have all these people now. That 6.2% unemployment number does not factor in people who are no longer in the job market. Those are the people who have taken themselves out of the market. They often cite the U6 unemployment number, which is more reflective of the broad economy, which includes those people, and it also includes part-time workers. That number much higher. I believe it was 10, 11%, something like that. What's going to happen when those people come back into the market at the same time that you have so many unemployed people that are still actively seeking jobs coming back into the market as well? One drawback here they talk about, mitigating factor. Should make sense, but boy, this might be a tough one, and this is a trend that's going to continue forever, folks. Economist outlook is that there's more of a mismatch in workers' skills than there was after employers invested in automation during the crisis, right? There's been a shift to automation in a dramatic fashion, folks. Whether you look at a company like Instacart, just came out with a valuation of like $40 billion, I think. I've started using Instacart myself more often. So then what happens, right? Maybe they're cutting down on the number of employees you need. I have one employee that's actually going in there doing all the shopping for me. Maybe you don't need as many people in the customer service sector of a company like Publix, or whether it's whatever grocery store you're talking about. The shift online, pretty dramatic. And then you look at the food delivery business, right? Taken off monumentally. Now that is going to subside for a period of time when we get out of COVID, because boy, restaurants, I hope they should be packed, folks. I can't wait to be out and about, surrounded by people everywhere if possible. But the trend, people are much more comfortable occasionally, at least, ordering food, delivering it at home, curbside takeaway. Interesting how that shakes out. But Goldman, they're looking for 4.1% by the end of this year. Okay, so there's a lot of huge growth priced into this market, folks. And I keep emphasizing it because you better pay attention. Because if we don't get huge job growth, if we don't get the unemployment rate falling, if we don't get the GDP surging, if we don't get some non-farm payroll numbers surging to the tune of 1 million or 2 million maybe on some months, market may get a little worried in a big way. All right, what else we got? Microsoft. Let's jump over to the Microsoft chart to kick things off. Microsoft accelerating lower last night. Check out this acceleration. Kaboom to 222.48. Not sure that's a super real print. Let's put it on a 1 minute to see if it was down there at all. Yeah, that's one print down there. But you were down to 226 when the market was getting a little dicey at about 4:30 in the morning. All right. You back up to a price level now of 230, 270. We're positive on the session. NASDAQ 100 is basically flat on the session right now. And this is having to do with that big data breach a while back. So the attack, which Microsoft has said started with a Chinese government-backed hacking group, has so far claimed at least 60,000 known victims globally. It's a sophisticated attack on Microsoft's widely used business email software, morphing into a global cybersecurity crisis. This is going to be a common theme again going forward. We operate online. Hacking is becoming more detrimental the more business we do online. Many of the people who have been hit, many of the victims appear to be small or medium-sized businesses caught in a wide net of attackers cast as Microsoft worked to shut down the hack. It's a tough deal, really detrimental to basically business as a whole. The rapidly escalating attack came months after the SolarWinds Corp breaches by suspected Russian cyber attackers drew the concerns of U.S. national security officials, in part because the latest hackers were able to hit so many victims so quickly. You're seeing quite a run again when you talk about 60,000. One U.S. cybersecurity company, which asked not to be named, said its experts alone were working with at least 50 victims, trying to quickly determine what data the hackers may have taken, while also trying to eject them. Hopefully these companies get a little bit better at protecting some of those vulnerabilities, but it's going to be out there. It's going to be a persistent threat hitting our economy, especially the more money, the more business we do online. The Chinese hacking group, which Microsoft calls Hafnium, appears to have been breaking into private and government computer networks through the company's popular Exchange email software for a number of months, initially only hitting small number of victims. You can see they built this up. They were in there for months. It sounds eerily similar to the Russian hack of the SolarWinds. Maybe not as rampant, but when you have hackers, they're able to be in there for a period of months. They start small, then they really ramp things out. The effect's pretty harsh in a big way. So Microsoft shares, interesting. We're right back to the high we had on Microsoft. We get some good volume there on September 3rd. That high, 229.31. We dipped down to that level briefly this morning. Shorter term time frame, Microsoft goes from January 19th, and we're bouncing right at around that 50% retracement. You like to see that when it's holding that level up today at 232.15. Microsoft, super strong company. The Azure cloud, basically Microsoft and Amazon, really cloud players out there. Other companies trying to get into it. But cloud's the future. Amazon's the king dog. Microsoft fighting to stay in that slot. We got the S&Ps positive by 23, the Dow at 313. Stay tuned, folks. Right back.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get another leg up in the markets going on right now. You got the S&Ps now above where we were on Sunday night, 38.72. You're positive by 9/10. You got the NASDAQ up 35 points, 12,703. That is above where we were on Friday as well. Jumping around to one of my favorite stocks, we have some Disney in the newsletter. Disney's up 3.6% today, up about $7, 196.95, putting Disney on a daily, climbing right up near those all-time highs of 200.60. Quite a far cry from the $79 we got in the lows of March. So a couple news stories out there for Disney. Number one, the one driving it higher today, Friday, after the bell, it announced that Disneyland and other California theme parks, stadiums could reopen April 1st. Remarkable when you think that Disneyland in California has not been open for, I think we're going on 12 months, folks. Disney World in Orlando, been open. I think it was diminished capacity in some degree. From all reports, I've had friends that go there. They've been doing a phenomenal job with some social distancing, some masks in Disney. Disneyland not able to be open. News out there Friday, April 1st. They may be able to open. California health officials set new rules Friday that would allow Disneyland, other theme parks, stadiums, outdoor entertainment venues to open as early as April 1st after a closure of nearly a year due to the coronavirus pandemic. But the return of Mickey Mouse to the happiest place on earth and live spectators to the California ballpark still come with major caveats in there. Let's see. They're permitted to restart on April 1st, severely limited capacity. But only if the counties where the operators are removed from the purple tier of California's color-coded COVID-19 restrictions, the system's most stringent classification. Masks, other safety measures would still be required. The parks initially would be able to open only to state residents. Attendance would range from 15 to 35% of normal capacity. Now, check out the reaction on just that news. Just the optimism of that happening, folks. The wheels are rolling. Everything is beginning to turn, okay? The acceleration on Disney really began when we got the efficacy of the vaccines. Once we realized this was going to be able to be over, I mean, Disney's up almost 60 to 70% over the period of, you're talking about almost 4 months, November, December, January, February. You push up from a price point of 120 to 200, you're up 67% in Disney, you're sitting at 197. All of that having to do with it's coming. It's coming right now. There's the first glimpse of it, but boy, they still got a long way to go when you're talking about 15 to 35%. Still reliant on which county they're in. Outdoor stadiums, ballparks, performance arenas also allowed to welcome back live audiences. California's been one of the toughest restrictions out there. Disney, thankfully, they have been able to grow their streaming business in dramatic fashion. As if you're watching this program, you're probably familiar with it, at least the amount that I've been talking about it. I'm a believer in Disney in a big way, folks. We got it in the newsletter. I got it in my own personal account, whether it's long-term and short-term, and I'm a consumer of it. I get the Disney bundle. I got Disney, Hulu, and ESPN. Now, this story out here, which is interesting as well from this morning. So Cinemark, they're a big movie theater operator. Striking back is how this story, the headline is phrased. At Disney refuses to show Raya and the Last Dragon. So you have theater operator Cinemark Holdings apparently protesting Disney's decision to release its animated Raya and the Last Dragon movie to both cinemas and Disney Plus streaming channel, refusing to show the film in any of its 345 theaters during its opening weekend. My take on this, folks, is the theater business is changing in dramatic fashion. These companies are in a really tough spot. I don't know how you operate as a theater operator when the shift to online has taken place. It's done. All right. Now, that doesn't mean that I cannot wait to get into a movie theater, watch a big blockbuster, right? Pay $15 per ticket plus $10 for a bag of popcorn plus $7 for a small soda. But the whole business dynamic has changed. HBO Time Warner is going to be releasing every movie they make this year to their streaming platform, HBO Max, simultaneously as they push it out into theaters. There's going to be a battle here. But these companies have a very weak position, the theater operators that they're battling from. You know, I mean, a company like Disney, and I'm not going to say they don't care about the theaters, because if you look back, I believe it was 2019, Disney had 10 different films that all grossed $1 billion in theaters. They took in $10 billion just by showing movies in movie theaters that they then were able to take and use on their Disney Plus streaming platform. That's part of the reason why I love Disney so much. They're a huge competitor to Netflix, yet they're able to take in so much money from the theater business that Netflix quite hasn't perfected yet. Now, it's moving away from that level, so Disney wants to be in that action, right? They're releasing these big blockbusters that might do $1 billion when you talk about the global sales, but their future is in streaming. They're going to have 350 million people on their streaming platforms over the next 2 or 3 years. They're not going to be worried, especially with a company like Cinemark, with this decision, and it's shown in the stock chart today, right? You're up almost 4% on Disney. Raya and the Dragon, I've seen it on Disney Plus just because I pull up Disney Plus. The movie grossed only $8.6 million in the U.S. and Canada, a feeble opening for the first big film of 2021. COVID's still out there, folks. We're getting in Florida 4,000 to 5,000 to 6,000 cases a day, even 7,000 sometimes. The numbers are still there. You know, be safe for the next couple of months as we get over this hump, because there's so much optimism that in our own heads, there's so much fatigue. We're so ready for this to be over, and there's so much optimism that we almost want to say, let's go. We're not quite there yet. All right, the numbers still tough. The finances of theater operators are stretched, to put it lightly. Let's pull up Cinemark on their numbers on that statement. Cinemark, now rightfully so, you know, same deal. We get news that the vaccine's going to overcome COVID eventually, 94% efficacy. We charge higher from $8 to $24.55. Cinemark's up about $25, but you put this thing on a 5-year weekly, and yeah, you were falling out of bed prior to COVID, folks. We were at $40 in the middle of 2019. We were down at $30 by the time COVID hit, and you hit $5 at the lows. Okay, let's back it up even further than that on a max. Yeah, so we chopped around for a while. It was quite a run we had from 2008 to the highs of basically 2015. But since then, all you've done is consolidate and trade lower. Let's jump over to AMC. Now, AMC had their own fun with Reddit shares. Take that volatility out of things, and this is a struggling company in the same way. You got to back it up to 2017 when you're at a price point of 33, a one-way rocket ship to lower prices of $1.91. Prior to COVID, at the end of 2019, you were trading at $8. I don't believe that AMC is in better shape right now than they were at the end of 2019 with what the last year has looked like. Doesn't mean that they're going to go out of business, but it doesn't mean that they're a growing industry, folks. They're going to be incorporated into how we view content at this point. They're almost going to be a secondary factor of how we view content. We're all so used to all these big blockbusters getting released at home, right? Amazon Prime just put out, Coming to America 2? I haven't checked it out yet. I can't wait to check it out. One of my favorite films from the 80s or whenever it was. Amazon, it's almost a non-factor in their chart because they have so much going on. But you see the shift change of what's going on here, and it's not going back. Netflix shares. Let's pull it up. NFLX. Similar to Amazon, as in these companies, the market figured out at the lows of March that things were just going to be gangbusters. It accelerates from 290 to a high of 575, and we've been chopping around, consolidating since about July. Stay tuned, folks. We'll finish up the Disney conversation when we get back. We'll talk about some of the companies with earnings and events going on this week. We'll be right back.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. I got a chart of the Dow up here. Dow up 386 points right now, a solid 1.25%. I got a chart up here on a daily basis, quite the uptrend channel. We've been bumping up against the upper boundary line or near abouts it. Man, almost since, we accelerated from that level. The lows of March, 18,086. We've dipped down to the lower level on this a couple occasions. Bumping up, we could take this right up to a new all-time high, folks. The upper boundary level I'm talking about right now is about 32,571, all-time highs on the Dow of 32,033. Jumping back to Disney real briefly. So Disney, of course, the news out there, Disneyland in California opening back in some capacity April 1st, which you also have going on out there tomorrow, Disneyland's annual meeting of shareholders. So that's going to be, I believe, virtual meeting online. That's beginning 1 o'clock Eastern time tomorrow, available via webcast. Not sure that there's going to be any huge big announcements. They've pushed back so much, pushed out already so much in terms of their earning calls. Even the last couple weeks, they've talked about the amount of original programming they're going to be pushing out. But typically, these annual shareholder meetings bring big announcements that you could have. We'll see what happens, but put that on your radar for Disney tomorrow. They'll have that going on. What else we have happening in the market in terms of news, in terms of earnings? So we're going to get Chevron has their annual investor day virtually tomorrow as well. We get Campbell Soup and Franco-Nevada and Oracle earnings on Wednesday. Verizon has their investor day. Be interesting to see Verizon. Now, Verizon, my mom worked for Verizon a while back, retired, putting Verizon on a 5-year daily even. This thing's been rocking. And check this out. I'm going to put it on a monthly. Check out the monthly going on. This is quite a nice uptrend channel. Maybe a little bit of triangle action going on right in the middle of where we've been, but you're bouncing on these lower levels of Verizon. We're right in the middle. Strong dividend yield on Verizon as well. As I mentioned, family's got Verizon for full disclosure out there as well, but they're going to be a big player in the 5G spectrum, folks. They got a great dividend. You just had Buffett entering Verizon with, I think, like $8.6 billion, which was the pop-up here you saw on February 17th. We're now back above that gap. Interesting. We almost got it all back. Right now, Verizon, a little bit inverse with the market sometimes when you're dealing with such a big dividend yield. You see, really, when you back it up to where we were, you did see a rise in the beginning of November, but as tech stocks, as everything charged higher, Verizon pulls back from 62 to 54. But you're talking about, folks, I think it's a $2.40 dividends. You're pushing 4 or 5% right now just for a dividend yield in Verizon on a yearly basis. What we also have is we're going to get CPI data on Wednesday. That's going to be a big one as the market's all about inflation right now. And we're getting PPI data on Friday. So look for those two numbers in terms of economic. And then you have an ECB decision on Thursday. So they come out with their monetary policy decision, expected to keep its deposit rate unchanged at negative 0.5%, even as bond yields have risen sharply. We also get DocuSign, JD.com, Ulta Beauty with their earnings. DocuSign, talk about a company that's been a rocket ship from 64 to 290. But again, we keep pulling up these charts, right? Quite a consolidation. We're going back to July. Similar action when you look at Amazon, when you look at Netflix, when you look at DocuSign. The market figured out in no time, folks. And it took 3, 4, 5, 6 months to price in all that growth of the online environment that we are going to be in since we've now come out of COVID. And the tech stocks have pulled back. You've seen some of these growth companies with rising yields suffering a bit. We got DocuSign towards the lower end of this consolidation. We're trading at 207. We're basically at prices of early July in DocuSign. Jumping over to the Analyze tab, they're going to have quite a move priced into their move on this week. We're talking about $17.40, that or thereabouts. And let's just add some of the options. Yeah, so, you got this week alone, you got more than a 10% move priced into the options because a lot of these companies, folks, we've seen it with Zoom. Okay, the market is very unsure right now of how to factor in the growth multiples of some of these companies in the long term when things are going to change. Normally, there's some consistency to some degree, right? Whether you start slowing, whether your growth starts decelerating, that means it's trouble, as in that's a trend that's going to continue. If you're growing gangbusters, that's a trend that's going to continue. Well, last year is not the same as this year. They're completely different, and the market is a little unsure right now of how to assign multiples on some of these growth companies for their fair valuations. I mean, Zoom is probably the best example of it, where you go from 335 up to 588, you give it all back, you go to 450, and just like that, we're back to 335. The high from August 31st, 325.90. That acceleration really began at about 304. That was the day prior to their earnings in August. We accelerate out of the gate. But since then, we've had some steep negative action. They come out with their purchase of Slack to the tune of about $27 billion. Market not liking that so much. DocuSign, not quite the same scenario, but we're back towards the lower boundary line. I mean, we just gave back on DocuSign from $275 to $207. You're talking about $70 or 35%. This company just gave back in less than a month. Strong company. I see no reason why we can't sign anything we do in the future online. That's where the trend is going. But boy, folks, we were just at 65. You're still at a triple bagger from where we were a year ago in DocuSign at about 65. All right, jumping around to what else we have going on, stories that I was taking a glimpse at. So GE, they're nearing a deal with AerCap to create a behemoth aircraft leaser. How do you pronounce it? GE nearing an agreement to combine its jet leasing business with Ireland's AerCap holding. People familiar with the matter, potential deal to join the world's two biggest aircraft financiers in a market roiled by the coronavirus pandemic. GE shares liking this action, up about 4.4% on that news. GE really charging higher from about $6 up to $14 on that, on a lot of optimism, but today making highs. Back things up, though, on GE, a 5-year weekly. My goodness, we got some room to do to make up, but we're now above where we were prior to COVID. Okay, the last 2 weeks, maybe 3 weeks have got us over that level. We're now also above where we were in terms of October of 2018. The highs there were 1378. The next area that's going to face a little resistance in GE, you're talking about basically $15. And look at that. Look at that. They're telling everybody, folks, you know what's coming up next? Fast Market Live coming up next at TFNN. Thinkorswim sending out all the notifications there. All right. What else we have going on? Let's see. Yeah, how about oil? Let's talk about oil as we wrap up this segment. Watch out for oil, folks. Boy, they got so many. All right, that's going to freeze up my platform for a few minutes. They must have a good program going on next, folks, sending out all those updates for Fast Market. Kevin Hinks, Alice Coffey, and the team at 11 o'clock. We got one more segment in this program going on. Stay tuned. We're going to talk a little bit of oil as we got an attack on the Saudi operations. We have oil at a cheaper price this was the case on Friday. Stay tuned for the
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. I got a chart of light sweet crude up there, actually down 1.3%, down 90 cents at 65.19. Taking a look at this chart, we're right up to where we were starting the year of 2020. The high there, 65.65, within about $1 of the action. We were up near that level in September of 2019 as well, reaching a high of 59.39, and right at that level as well, April of 2019, almost going back 2 years. The high, April 2019, I have 66.60 on this chart. But again, What to pay attention to here is, folks, we had an attack on key Saudi Arabian oil sites, did cause the price to rise overnight, but then a pullback. Maybe it's all kind of getting priced in there, folks. And one of the other stories out there about oil talking about that OPEC is the one that is in control. The U.S. supply slashed dramatically. OPEC, the producers group in charge of the market, one analyst and trader talking about out there. And the last story we'll cover, how about GameStop charging higher yet again? So they are putting the Chewy co-founder, Ryan Cohen. So he's the one that kind of started this whole deal, right? He buys a huge stake in GameStop. I think he got a couple of board seats on there. Cohen will serve as chairman of a new committee created by the board. Cohen's investment in GameStop, as it says, helped spark the stock's wild ride. GameStop, it don't stop. How about it? Look at this chart, right? Now, that's a weekly. Let's just put it on a daily. We'll zoom in on the action. Quite the rise. We thought all the fun was over, but no. February 24th, we run again. We reach a high of 184.68 on the 25th, and since then, it's been a slow creep up, and we're up another 18.4% today to 163.08. They might have a future. Cohen's been pushing for an online presence. He's in charge of it now. But I'm not sure they deserve a $163 price in that equity just yet. Be careful out there, folks. All right, folks, stay tuned. We'll finish it up. How about the VIX right now? Trading at 24.52. Volatility's here, folks. Stay tuned. We got Fast Market next. Basil Chapman at noon. Steve Rhodes, Dave White, Tom O'Brien, my dad, live at 3. All companies. Thanks for tuning in, folks. Have a great Monday.